Hello and welcome to our week ahead look at the markets here, and with me, Neil Wilson. I'm the Chief Market Analyst. It's been an interesting few days in the markets. We obviously had to contend with quite a whipsaw in some of the indices and in some of the major sort of FX pairs, gold as well. We've seen oil break out to levels not really seen since the pre-pandemic era, that March 8th high for WTI coming into view. Gold has broken out past 1800 again, and the non-farm payrolls release obviously set the cat amongst the pigeons on Friday, as it delivered an underwhelming number of 266,000 for the month of April. But wage growth was strong, 0.7%. So a few worries, concerns about the pace of labour market growth. But I don't think it really changes the narrative. The US economy, by all other gauges, is pretty much booming. Labour employment figures remain a lagging indicator. So we could probably look through those numbers. Nevertheless, so there are concerns. Of course, what you have is a situation whereby a lot of the lower paid workers who lost their jobs are simply not prepared to come back to work because they're getting so much money from the government. That has obviously problematic consequences for the economy, for the pace of growth, productivity growth, and closing the output gap. So worries, I think, really about the nature of the US economy, the shape of the US economy's trajectory over the coming months. That is what I worry about from that payrolls number. But as far as the market is concerned, it's good news really, because it means the Fed can stay easier for longer. Tapering will be kicked down the road by a month or two potentially, and that bodes well for the market. And although we saw Dow futures collapse on the news, Nasdaq rallied, of course. Lower interest rates, good for the Nasdaq. Lower interest rates are bad for the Dow, basically, in a nutshell. And so we know the Dow fall, Nasdaq rally, but quickly that was reversed, and the Dow was up as well as the Nasdaq. So a positive session on Wall Street. Good week for the market. The FTSE broke out above 7,100, so a couple of new all-time highs as well. The Dow hit an all-time high on Thursday, coming into that Friday non-farm payrolls number. So looking ahead, we have the CPI numbers from the US, all important to see whether that inflation story starts to pick up. If inflation does start to pick up faster than jobs growth, that creates a headache for the Fed, seeing as it's committed to keeping interest rates so low for so long until it gets employment levels back to where it wants it. If inflation starts to gnaw away at earnings and away at people's spending and purchasing power, well, that causes a deeper, more problematic worry for the Fed. Also, watch out for those retail sales numbers from the US as well. Also, data-wise, we have the UK GDP numbers. Backwards-looking data, probably not a massive influence on the course of where we think the pound's going to go, or where UK assets might head. But nonetheless, keep your eyes out, because the Bank of England upgraded its forecast to 7.2% growth in 2021 at its meeting last week, based partially on the fact that the Q1 slowdown, which these numbers will refer to, was not as bad as feared. So expecting a contraction of just 1.5% in Q1, nothing like as bad as we thought it might be around Christmas time when the lockdown was announced. The pound has really struggled to break out any kind of moves above 139, 140, and it might still struggle, although the dollar is now coming under increased pressure after that non-farm payrolls print, and worries really that the US economy is whilst growing, whilst enjoying a big bounce back, is not, it's all based on thin air. So a lot of this is to do with the sort of broader market themes and macro themes of whether or not the Fed can really do anything longer term, whether the bond vigilantes come back, and whether printing money and creating a dependency culture of people who don't work is actually a good thing. Finally, earnings are up. We've got Alibaba and Disney. Keep your eyes on those. There's a chunk of earnings out there, all available on the platform. You can find out what's going on, and also on the website we've got the week ahead up, and you'll be able to read all the latest insights there as well. That's it from me for now. Thanks for watching.